And then clients, if they wanted to know what their stock was doing, we didn't have mobile phones. Only super rich people had mobile phones, and they were huge, man. They were about that big. So the bottom line is people would buy stocks, and they would heavily depend on their stock broker, which was me. So I put people in stocks. I would study companies very much like they do today. And then, of course, bonds and then mutual funds. And then we would do stuff. I was licensed in a lot of different areas, insurance. So I would do a whole life insurance policies, especially for my very wealthy clients. And they were used as an estate planning tool. It's not like they needed the life insurance, but what they wanted to do is to have enough life insurance so when they passed away, the life insurance would pay for their estate tax.
Wow.
Because, and it is today too, I'm not sure exactly what that number is, but if you die with a certain amount of assets, do you know the government will tax you on your assets over a certain amount?
Wow.
So if a person is worth, I'm just going to use some general figures, $50 million in assets. And let's just say that threshold is $10 million and you die. Well, of course, you can pass it on to a spouse and so forth. But after the spouse dies, that estate becomes taxable.
Right.
So if that threshold is 10 million and you're worth 50 million, you have to pay taxes. They call them death taxes on $40 million.
Wow.
So a lot of wealthy people
The
today.
government going to get theirs.
Yeah, man, they're going to get theirs, and they get it twice. They've already taxed you.
Yeah.
And then they come back. So the bottom line, I would help very wealthy people plan for their estates by investing and by ensuring that their money could last for generations. And a lot of times I did that through life insurance products.